recession in the US is anything that the National Bureau of Economic Research deems to be a recession.
Gerald Celente gives his views on how to protect yourself from a recession.
I can't give financial advice. I'm not a financial advisor, but speaking for myself, I call it guns, gold, and a getaway plan. Gold is number one. One of the things that it took me a lot of years to learn is that when things collapse, it doesn't collapse everywhere and at every level. And then things start coming back. When the collapse happens, yeah, it's time to wait and look. But there's 7.5 billion people on the planet. Not everybody's going to go down. So there's going to be opportunities as well. But for me, gold is the number one investment. And I've been saying that since I began buying gold in 1970. I have some silver, but gold is my priority. I have 2/3 gold.
Yaron Brook, from BHC Capital, gives his views on protecting yourself from an economic decline.
It's really a difficult time as an investor right now, because the fact is that if inflation happens, then bond prices are going to tumble. And if you stay in cash and there's inflation, the value of your cash is decreasing. The fact is that if there really is inflation, you want to be in something like gold, because gold actually maintains its value. It's not an investment as much as it is a store of value. It's an ability to actually maintain the value. Stocks don't do terribly under inflation, but you better not be in long-term bonds. Long-term bonds are crushed in an inflationary environment. Of course, the slow growth is bad for stocks. It's government intervention in the economy and slow economic growth are not good for investors. We want, as an investor, I want freedom. And freedom means government to separate itself from economics, from economic policy. Not a big fan of Bitcoin. Cryptos, I think it's still too early to tell. I think we'll see how they evolve. I don't think crypto is going to be a store of value. I think crypto is going to be a facilitator of transactions. Smart contracts are something I think that is very interesting. The whole blockchain phenomena is an interesting phenomenon. I don't think it's a currency. I like gold as a currency. I'd like to see cryptos backed by gold. But at the end of the day, gold is money. Money should be a commodity. Money should have some reality to it. So I also don't like the idea of legal tender. I'd like the government to stop having legal tender. The only sense in which the government should intervene in the currency is say, okay, we accept gold as payment for taxes. That's it. Other than that, they should have no involvement in currency. The ideal would be shut down the Fed. It would take some time. You'd have to phase it out. But the ideal would be private banking, where the banks issue the currency. It used to be that on a dollar bill, you had the name of the bank that issued the currency. And that money, in order to be legit from the marketplace's perspective, would have to be backed by something. I think the best thing to back it up is by gold. But it should be private banks. It should be competitive. Different currencies can compete. If you want to start a currency on Bitcoin, if you want to have a currency that's backed by plutonium, I don't know, whatever the hell it is, let the market decide what the best currency is.
Peter Berezin gives his views on how to protect yourself from an economic collapse.
The reality right now is that some measures of economic activity are pointing to recession, others are not. And in particular, the labor market, which often weakens during recession, has not yet begun to weaken. There has never been a recession in US history where the unemployment rate has not risen. Well, so far it hasn't risen. So I think right now it is fair to say that we're not in a recession, but we are getting awfully close to one. We just moved to neutral in our equity allocation recommendation. I think over the next 6 months, markets probably still manage to go up as recession risks fade. But then as we get into early next year, what we're going to see is the markets start to weaken again as it becomes obvious the Fed does not have any reason to cut rates, and in fact may actually need to raise rates further in order to bring inflation back down to that 2% objective. Some of these consumer staples, they might be worth owning if you think that we're heading into a recession imminently. Certainly there are other defensive sectors such as healthcare that I think should do reasonably well. The reality is that when recessions occur, stocks usually go down, so often there aren't that many places to hide. And in particular, this time around, if the reason we have a recession is because inflation is too high, then hiding in bonds may not be such a great idea either. Businesses that sell things that people have to buy. So consumer staples, necessities, healthcare, as I mentioned. What you want to avoid is the discretionary stuff. If people can forego buying a refrigerator, they'll do that during a recession, it's not too easy to forego buying food. The dollar is a safe haven currency, so if we have a recession, then the dollar probably would strengthen. The only caveat is the dollar has gotten very expensive. So relative to its purchasing power parity exchange rate, so that's the exchange rate that equalizes the price of a basket of goods and services across countries. The dollar is about as overvalued now as it was in 2000 when it peaked, and almost as overvalued as it was in 1985 when the Plaza Accord was signed. So the dollar could strengthen, but valuations suggest that over the long term, the dollar will probably weaken. If you think that stagflation is around the corner, it's not my view, but if that's your view, then the template of the 70s is pertinent. And which asset class did best in the 70s? Farmland. So that's something that you want to consider. What else did well in the 70s? Gold. So that's another classic inflation hedge. So farmland is real asset. In an inflationary environment, that's something you want to consider. Now, agricultural prices, as we mentioned earlier, have declined. In fact, not that long ago, there was this worry that wheat prices would go so high that we would see famines in parts of North Africa and the Middle East. But in fact, wheat prices have basically fallen back to where they were prior to Russia's invasion of Ukraine. Again, you have to be a little bit nimble here. We are living in a world that has the capacity to produce a lot of things, including food. It's not a Malthusian world anymore. So while agricultural prices could rise, I would be skeptical that they would stay high for a very long period of time.
Warren Buffett gives his views on crowd psychology during a recession.
You will see things you won't believe in your lifetime and securities markets. And the country will do very well over time, but you will see these huge waves. If you can stay objective throughout that, if you can detach yourself temperamentally from the crowd, you get very rich, and you won't have to be very bright. It doesn't take brains, it takes temperament. It takes the ability to sit there and look at something. When I started out in 1950, I would go through and find things at 2 times earnings, and they were perfectly decent businesses, and people wanted jobs at those companies, and everybody knew they were going to be around, and they wouldn't buy them at 2 times earnings, and that's when interest rates were 2.5%. I started selling securities when I was 21, and a Kansas City life insurance company happened to be a fairly prominent company in Omaha. And the policies they sold you, if you were buying life insurance from them, had a built-in assumption of 2% interest. The stock of Kansas City Life was selling at less than 3 times earnings. You were getting 35% if you bought the stock. No question about the soundness of the company. I went to the local agent. I figured, hell, I ought to be able to sell him a few shares of stock. I mean, the guy ought to understand it. I mean, he's got his whole life invested in this company. I went to the local agent who'd been with him for 20 years. His name was Moose. I said, Mr. Moose, you're selling these policies with 2%. You may even have a few members of your own family, and you can buy into this company whose paycheck you depend on every month and whose future your beneficiaries of these life policies depend on, and who you're selling them, a 2% investment on, and you can get 35% on your money. He said, stocks aren't any good. I couldn't sell the, I was a lousy salesman. You have to start with that. It just blew me away. It blew me away. Sometimes I used to wonder if I was nuts.
If you found value in this video, please like the video and let us know what other topics we should make a video about next.